Hello, and welcome to this week's edition of Inside Today's Boardrooms from Diligent Institute, your source for the latest and greatest in corporate governance, all in 10 minutes. I'm Lisa Edwards, Executive Chair of Diligent Institute and host of the show. Today, I'm joined by Daniel Kerstein, who leads the Shareholder Advisory Practice for TD Securities. Welcome, Daniel.
Thanks for having me, Lisa. It's great to be here.
Yeah, I'm super excited for this topic because, there's a ton of anxiety among board directors when it comes to activism in general. And I think, one of the best ways as a semi-prepper for earthquakes in California, one of the best ways to deal with that anxiety is to be as prepared as possible. And, that really means being ready in case an unfriendly shareholder comes into the stock. But it also means sort of working to make sure that the company shows up well with the shareholder community to avoid those issues in the first place. So maybe let's just start with that first one. You've worked with a lot of companies facing activists like Corvex and Elliott, Sherborne, Starboard, like all the big names. What are some of the common things that you've seen about a company that might catch the eye of an activist and lead them to start taking a position?
Yeah, sure. I think it's a really good question, Lisa. And I think it's one where not much has changed since I started doing this probably 13, 14 years ago. And that is, in many ways, activist shareholders are what I would like to refer to as noisy value investors. So they're looking for many of the same signals and signs that your regular way value investors are looking for. Share price underperformance is usually a really good indicator or a good warning sign. And that is underperforming both the market and especially your peer group and closest competitors. Lagging valuation multiples, another one, often go hand in hand with that share price performance. But another good sign to be looking for. And then I think at times you'll have overall operating performance can be a pretty good indicator and a pretty good signal of things are at risk. And in particular, declining margins or increasing costs that are leading into those shrinking margins. And then I think one that we probably don't spend as much time on because historically had not been, and I think it's become a really important factor, is the issue around governance and what I'll call, maybe red flag type events. So sudden departures of executives or, certain events that may take place that have a negative impact on the company or on customer base and performance. And I think the last one, which we've probably seen so much of over the years, is that sort of disparate businesses or the sum of the parts where there's a lot more going on at the company in different business lines that may not be particularly well integrated, or maybe where there's hidden value because there's an asset or a business line that could be trading at a significant premium to where the rest of the business is currently trading. So unfortunately for our directors and our CEOs, it's a fairly long list of signals that you need to be mindful of. But they ultimately, I think, boil down to how is the business performing? And are there things that an activist can kind of put their finger on and use as a catalyst to drive momentum and the price higher?
Yeah, and some of those are fairly obvious and things that exec teams and directors are going to be, kind of constantly looking at. How do we improve performance? How do we improve the top line? How do we improve the bottom line? But are there things that they can actively work on to say avoid an activist position, whether that's shareholder outreach or paying particular attention to lines of business like you mentioned? Is there anything in there that you would say, what, go ahead and take a look at these things and make sure that you're shipshape?
I think it's a really good question, and I think it's one, Lisa, that leads into I think where I have always spent and think it is going to be key for our business going forward as an advisor, which is working with our clients to be proactively prepared. And preparation is in part the response if someone shows up. But to me, I think when as an advisor, I believe we've done the best job is when we actually work with the company and nobody shows up, because maybe we've been able to do some of that self-help. And I think, some of it is kind of, as you said, straightforward. How do we improve margins? How do we focus on the bottom line? Sometimes we know what that is. And sometimes you have to make the difficult decisions. And I think it's a question of doing that very important self-assessment and thinking about, we like to call it a vulnerability assessment, and thinking, if someone were an activist, how would they target the company? If they were coming after you, if they were looking at the businesses, what are the areas of weakness that someone is going to put into their white paper or talk about in press releases. And so when you start to focus on those and you put them in kind of maybe stark black and white on the paper for the board and for the management team to consider, it often will lead them to taking action or taking steps that I think they may know needs to be done, but sometimes it is just a very difficult and very complicated issue to deal with. So I think that is probably step one. And then I think you touched on what is probably the most important and continuous effort that needs to be taken, which is that shareholder outreach. And I think the emphasis there that I would add to it is it has to be continuous and real. And I'll kind of underline the word real, which is there's checking the box in terms of shareholder outreach. You go to a conference, you do some meetings with your investors or after earnings, and you take some calls and some questions. I think it is really being, again, in the vein of being open to the criticism or being self-critical, hearing what it is that your shareholders are thinking, understanding what they're both happy about, but also concerned about, and making that a two-way dialogue, not talking at your shareholders, but speaking with them, because they have really fantastic perspective very often, and they see what other people in your sector and maybe other sectors are doing. And I think it needs to be one where they feel comfortable sharing with you, because there's a lot to be learned in those conversations.
Yeah, I like that. I like especially the, think like an activist and be prepared to make the tough decisions without having, the sword of Damocles hanging over your head. Let's dial forward to, okay, an activist in the stock for whatever reason. What are some of the first things on that break glass in case of emergency list for you that a company needs to do once an activist is in the stock? And what are the, to follow on to that, what are some of the mistakes that you see made?
Yeah, I think maybe rewinding a little bit, because I think that's part of the preparation piece as well, right? Which is, a better prepared organization is going to be a better responsive organization, because what you're going to do is, maybe jumping ahead to what are the mistakes? It's the urgency, but not the panic, that is incredibly important. And I think that is kind of the biggest mistake, is that there is a rush to action because people are not prepared, because they don't have the knowledge or have not done the work as to this is how we're going to respond to, or this is what we're thinking about. And I think what that comes down to is a little bit of the really making sure ahead of time who are the important people internally and externally that need to be informed, that need to be contacted. It's not something you want to figure out at 3:00 in the morning. And start to, wait, who's calling who, and wait, where do we have phone numbers for everybody? I think the other piece to that then is when you have that and who needs to be called and who needs to be part of the conversation, it allows for a sharing of ideas and of knowledge. And so you can bring in both the experts internally and externally. You can have a conversation, decide, assess what actually has happened. Was it a public announcement? Was it a private approach? Is it something that is on the far end of aggressiveness, or is it something that maybe now we're starting to monitor? And I think it allows you to then make those decisions and to think about the appropriate level of response. I think one of the things that I'm always cautioning clients about is that a response is not always necessary day one. And it's important to understand and to think about whether or not you want to respond and if you have to respond. And then what should that response be if it's actually warranted? Not just to kind of jump into the deep end of the pool and then start thinking about if you know how to swim.
Yeah, it's a good point. And, perhaps maybe expand a tiny bit, because I think this is starting to become more of a phenomenon on that sort of announced versus unannounced position in the stock. And does your advice change depending on that?
Yeah, I think you have a lot more ability to think about how you want to engage, who you want to engage with, and what that might look like when the situation remains private. I think once it's out into the public domain, there's a lot more pressure that comes both from other shareholders. You have employee pressure. You can have vendor relationships that start to wonder about what the ask is about. And so it becomes a much more complicated situation in the public domain. Again, in the world of, I always like when the activist never shows up. But if they show up, one of the rules of the road that I'm a big fan of is trying to keep the conversation between the parties in the private domain. I think it allows for a much better relationship and a much more constructive back and forth.
Yeah, I like that. What is the activist landscape right now? I know that COVID threw a lot of things up in the air. Some were doing, having their own struggles during the pandemic, and the action went down a little bit. But what segments are hot now, and how is M&A playing into just that whole activism landscape?
Yeah, I think it's a really interesting time. I think the landscape, as you said, coming out of COVID, some of the struggles that we saw. I think even going into COVID, there was starting to become a little bit more of a barbell within the activism world between the smaller cap and smaller AUM funds on the one hand, and then the large cap, larger AUM funds on the other hand. And I think that still continues, and if anything, has been somewhat exacerbated. Where it has remained a much more difficult time for the smaller end of the spectrum. I think there is a question that exists, and I don't know the answer as to what is the market like for smaller cap companies, which are frequently targeted by those types of activists. Are public markets really working at that end of the spectrum? I don't know the answer to that question, but I think it has made it a challenge. I think on the larger end, as we've seen, it's a market that has been driven by larger players, obviously specifically in tech, but the overall market has been driven by larger cap, more liquid names. And so I think there's a performance disparity between the larger names and the smaller names on the activism side as well. But it's overall been a challenging year, I think, so far for the activist funds. The last year or so saw a pretty good rebound in terms of the number of campaigns. And I think we continue to see, Lisa, to your specific question, a lot of campaigns in consumer, campaigns in the technology space. And those have been historically the two most popular spaces for activism campaigns. I think we've seen probably an uptick within the industrial sector. And I think that's a little bit into your question around M&A. There seems to be a fair amount of consolidation there. I think overall consolidation in the market, the overall deal volume by dollars seems to be keeping pace with where we've been. The number of deals has fallen off. And I think, again, some of that driven by the lower end of the market being a difficult place to play at the moment. So I think that will hopefully correct itself going forward, because we'd like to see more deals overall. And I am, ultimately at heart an M&A banker, but we do think from the activism perspective, obviously a rebound in M&A, a rebound in deals does give them another lever to pull, and it's been an important lever for activists over time.
Got it. Well, you mentioned something, so let's pull that thread. You mentioned being a banker, but you also have, I think, kind of a unique experience that you bring to the table, which is, especially for our audience for this podcast, which is thousands of public company directors. You actually sit on a public board. Has that changed your, the way you view your job, and how is that helping you in this current role?
Yeah, I would say it has definitely changed and also helped. In the change piece of it, I think that as an outsider to boards, as an advisor specifically, and with the focus that I have around how to prevent and how to respond to activist shareholders or other types of situations of that nature, I think we, or maybe I should just speak for myself, have often had the view of, well, there's a problem, you fix it. And I think that it's often maybe misunderstood, or we don't fully appreciate how much work or what the challenges have been that got to that point. And that history can be important. And I think it's important both in the board's actions going forward, but also in appreciating why certain actions may not have taken place. And I think, in good situations, we learn that as an advisor. But I think it's interesting, and when you sit in a boardroom and you start to gain that appreciation for what has happened and what has brought you there, I think it's a really useful perspective. I know that will hopefully help me as I advise companies. I think the other thing that I've seen is I think it has helped me or renewed my appreciation for the effort that board members bring and for what they're trying to do and accomplish for shareholders. And I think it also helps on the other side of it for me, where it has given me maybe a different appreciation for how to help those board members, for really maybe thinking about how to break down and to show them, what are the drivers or what are the dynamics so that they can better execute in their role as being sort of the stewards of creating shareholder value.
Yeah, that's great. I think if nothing else, even just bringing the empathy of understanding, the seat that's being sat in, if you will, is almost critical in of itself. So really helpful, I think, for your role. So lucky customers and clients. As we get to the end here, you've given us a lot of really good nuggets. Any parting thoughts on best practices for boards as it relates to activism?
Yeah, I think it's really tying together a lot of the things that we have talked about, and I think it is to me, maybe the Boy Scout in me that thinks "be prepared" is a fantastic motto. I am a big believer in that the best prepared boards tend to be the ones that do the best, whether it's in avoiding shareholder activism entirely or in responding to it if it does show up. There are reasons and situations for why, no matter how well run or how well governed a company is, that a shareholder or activist may end up in the register or may approach the company. I think that is, in some ways, maybe the badge of honor that we wear as board members for public companies. But I also think that being prepared and knowing how to respond, where again, what the steps are, what the necessary approaches are. And I think it allows for a very healthy dialogue if that happens. But most importantly, I think before it happens, I think it allows for boards and for management teams to have a healthy back and forth to debate issues and whether or not steps should be taken. And it's a really good process that I think, both for myself and for my clients, in terms of helping for the board and for management to consider what alternatives are actually out there, and then which the best ones might be going forward.
I like that. At the end of the day, it can be a very healthy exercise that makes the company stronger at the other side. Well, unfortunately, that is all the time that we have for today. Thank you so much, Daniel, for giving us such a great view on this topic. And thank you to our audience. We'll be back next week with another episode of Inside Today's Boardrooms. Thanks, Daniel.
Thank you so much, Lisa.